Hey everyone, welcome back where we break down the hottest stocks in simple terms. No confusion, charts, or fancy talks, just straight facts to help you decide if it's a good buy. Today we are talking about Netflix. Netflix remains the largest streaming service globally by subscriber count, with an estimates ranging from around 301 million to high as 310 million in early 2025. It's substantially larger than any of the single competitor, with roughly double the global subscriber count of Disney+. Disney Plus global numbers are driven in part by its expansion into India as Disney Plus Hotstar and its aggressive bundling with Hulu and ESPN Plus. Amazon Prime's video's true subscriber count is hard to verify as the membership are bundled with the broader Amazon Prime services. Stick around and I'll show you the good and the tough and why analysts are buzzing about this stock. If you're new, hit the subscribe and let's jump in. Let's start with two recent events first. Netflix stock tumbled around 10 to 12% after Q3 earnings report. The drop was triggered by a shortfall in the earnings per share and an unexpected 619 million tax charge from Brazil, pushing the operating margin down to 28 instead of the predicted 31.5. Even though the revenue growth remained solid 17%, investors reacted to the miss, sending the year-to-date gain from 50% down to 25%. On October 30, 2025, Netflix announced 10-for-1 stock split, effective 17 November. This move will cut the price for each share, making it easier for everyday investors and employees to own the Netflix stock. The news has been positively received and is expected to boost the trading activity by making Netflix shares much more accessible. Now, before we move on, let's talk about making this easier. Stocks can feel overwhelming with all the numbers and jargons, right? That's why I built an app. Clean, free, and super easy for stock analysis at your fingertips. Check it out to cut through the noise. I own this app, so I would love your feedback. Now, back to the stocks. Let's get to know the Netflix. They are all about giving you movies, shows, no waiting, no cable bills. The main gig is streaming service you pay a monthly fee for, pulling in cash from the folks around the world who just want an easy entertainment. Think busy parents, young adults, anyone with Wi-Fi craving a quick escape. What makes them stand out? They've got a huge library of stuff, borrowed hits, and their originals like The Crown or The Wild Squid Games. Everyone knows the red and logo, and their smart suggestions keep you glued to the screen and figuring out what you would love next. You can watch on their websites, phone apps, smart TVs, even gaming boxes and cable add-ons. Pros and cons. Now, the real talk. What's working for Netflix stock and what's not? On the bright side, they have nailed the growth. Revenues climbing fast, profits are solid. Big analysts are cheering them on a buy calls. That's the reason stock split made shares easier for everyone to grab, and the price is nicely up at 1,119 after 2.7% gain. Overall sentiment from the market, super positive, but it's not all smooth. The price tag on the stock feels steep compared to others. It swings more than average, so be aware for ups and downs. Still, with a score of 82 out of 100, the win outweighed the worries, at least for now. Analyst estimates. Analysts aren't shy about Netflix. They love it. Out of 49 experts watching close, most says buy, with 25 strong buy and only a couple saying sell. Their average price? 1,347. That's about 20% higher than today's. High-end hits 1,600 if things goes wild, but a low of 717 if it's dip. The crowd's mood is buy all the way. Even in the bigger software world, it's a thumbs up. Volatility is a bit high, but nothing's crazy. Bottom line, Pro sees the stock climbing, not to forget the recent stock going down, giving an opportunity to buy at a discounted price. Market intelligence and valuations. Digging into the numbers, Netflix looks pricey but promising. Their price to earning is 45, way above usual 13 for similar companies, even higher than industry's 42. Sales multiple 10.9 versus peers 2, premium stuff. Earnings score at 4 out of 6. Growth is perfect, 6 out of 6 with an EPS jump around 5.5 yearly, beating a tiny 0.3 others expect. Performance is middling at 2 out of 6, health solid 4 out of 6. Over the last year, stock has trended from 750 low to 1341 high, now comfy at 1119 after some bounce back. It's recovering strong with the today's gain keeping the momentum alive. Industry comparison. How does Netflix stack up in the software and the IT crowd? Gross margin. Netflix keep 46% of every dollar after paying for shows. Industry average 67, so they spend more to make the great content but still growing. Operating margin. After all bills, Netflix pockets 27 cents per dollar. Industry only 12. They're twice as good at turning sales into profit. Net margin. Final take home 22 cents per dollar. Industry gets just 10 cents. Netflix wins big on the bottom line as well. Debt to equity. Netflix borrows around 63 cents for every $1 of the owner's money. Industry only 33. They use more debt, but they're also paying it faster than the others. So yeah, Netflix costs more, spend more, but keeps way more profit. Growth engine still running hot. Competitive risk. Major risk includes the rising content cost, possible loss of licensed material, and difficulties in keeping up with the higher subscriber growth in the mature markets like US. Sometimes regulations, currency swings, and changing the consumer habits also becomes a problem. SWOT analysis. Let's sort this out simple. Strength. Netflix rules with 310 million fans in 190 countries. Killer brands from its hits like Stranger Things, steady cash for buybacks, and fresh move into games and ads. Weakness. High price makes it shaky in the bad markets. Rivals are squeezing the growth. Big spends on the shows and no dividends for steady income seekers. Opportunities. Grow in new countries, hungry for streaming. Ramp up ads, live stuff, dive deeper into games, team up with more content, and use smart tech for the better picks. Threats. Rivals like Disney pour in cash, rules block shows abroad, economy hits the wallet, and tech flips the script. Pirates steal even more views. Financial fundamentals. Money-wise, Netflix is firing on all cylinders. All key profits are climbing. Gross margin, OPS, net, all up, strong over 15 years. Returns are solid too. Equity 35, asset 16, and investment 23. Everyone trending higher. It's like a snowball effect. More shows, more viewer, fatter margin. No weak spots here. They are built to keep growing. So, wrapping it up. Netflix is a streaming boss with a killer content, happy analyst, profits rolling in, but watch for the rival fights and that high price. If you're into growth plays, this could be a next pinch. Score, I would say buy if you can handle the swing. What do you think? Is Netflix a must-have in your portfolio? Drop a comment below, smash like if this helps. Thanks for watching. Catch you next time.